Hey everybody, Stephen Sitkowski here, leading educator on how to trade the financial markets. I'm also the founder of the Sitkowski Trading Academy, and I wanted to spend a few minutes with you today giving you an update as to what's going on in the market, where I think this market is headed. I can't tell you how many people have called me, friends of mine, associates of mine. What do I do? What do I do? What's going to happen? And the good news is I've had a number of emails, posts on my Facebook page, text messages of thanks from people who have actually made money in this market because of things that they learned attending one of my classes. But because this is so critical, I actually made some notes. Usually I just sort of talk extemporaneously, which is fine. But these are pretty serious times. And I'm going to take this super to heart. All right, so let's talk about the performance of some key indexes. It has been, as you can imagine, a bloodbath out there. The S&P 500 hit its high on February the 19th. It is 26.7% off of those highs. The Dow hit it on the 12th. It is 28% off of its highs. The DOW Jones Transports, which is considered a leading indicator for the stock market, hit its high September 14th. Since then, it has dropped 37.3%. So in other words, we are in bearish territory. Yesterday, if we looked at winners versus losers, only two stocks yesterday hit a 52-week high. 2,377 hit a 52-week low. Now, you may have been introduced to a new term. It's called a circuit breaker. And basically what that means is if the market falls too far, then the markets shut down. So the way that works is if the stock market falls by 7%, then they shut the market down for 15 minutes. And they're trying to avoid panic selling. Let the voice of reason come back. If the market then falls 13%, they shut it down for another 15 minutes. If the market falls 20%, it is done for the day. All right. The news. And then we're going to jump in and I'm going to show you the chart on the market and give you a couple of ideas. Trump is going to declare a national state of emergency. So it gives him and the government certain powers to be able to go in and hopefully rectify some of the situations where the pain is a little greater than other places. You may have seen where the Fed is pumping in $1.5 trillion to provide liquidity in the financial markets. So we have something like $3.6 trillion in money funds. So these are short-term obligations which come due. They need to be redeemed. Then they get resold, and there needs to be enough capital to be able to do this, and that mechanism got stuck. And the Fed moved in and they said, not only are we going to do this, we're going to use every tool at our disposal to help support the economy and help support the markets. Well, what happened was at the time they made the announcement, this was a couple of days ago, the Dow was down 1,800 points. And then the market responded and it gained back 300 points. So it was down 1,500. By the end of the day, the market was down over 2,300 points. It just sloughed off the news, which is pretty telling. The White House also has a plan. So I'm not sure what they're going to do. They may suspend payroll tax for a while. They could even suspend income tax for a while. They could put together a bill to be able to help businesses that have to lay off employees and so forth. The sports world is shut down. NBA suspended. NHL suspended. Major League Baseball postponed. March Madness done. Travel, people just aren't going anyplace. And in fact, Google, they decided not to hold their annual conference. Same with Twitter. Same with Warren Buffett. So they'll do these virtual. By the way, I heard that if travel worldwide dropped by 50 or 60%, that it would reduce the worldwide GDP by 5%. That is absolutely huge. So let's talk about where I think things are going and what you ought to do. My personal belief is we don't have any kind of a solution yet for the coronavirus, number one. Number two, we still have incredibly low oil prices because the Saudis and the Russians, they're basically battling each other, so they're just flooding the market, and oil prices drop, boom, 20% in one day. That's a huge strain on the market. Refineries at these oil prices can't afford to operate. So what are they going to do? They'll shut down, lay people off. We are, in my opinion, headed for a recession. And you might be thinking, man, this guy doesn't normally sound this gloomy. Well, tell me the last time we dealt with these kinds of issues. You think there's any close cure for coronavirus? I mean, there won't be a vaccine for a year to a year and a half. Now, do I think we're going to contain it? Sure. China's done a great job, but you've got Europe they're the epicenter now. And so we're going to try to avoid what happened in Europe. Will we get our arms around it? Yes. But until we do, people are just going to stay home. They're not going to be mobile. They're not going to be spending money except on the absolute bare essentials. The grocery stores, I just got back from my grocery store. It's a joke. It's like the end of times. Fortunately, I don't shop the way that a lot of other people shop, so most of what I wanted, I could get. But the reality is that it is absolutely positively going to have an impact on the economy. Wall Street has about a 60% probability built in for recession. Corporate profits are going to go down. So I think this market's got another, 10 to 15% more to drop. I think that's realistic. And so here's sort of my strategy. My strategy is like today we're having a good day for whatever reason, right? Could have been all these other news announcements. If you're in bullish positions, in other words, you're long stock, and by the way, this is education only. I'm not telling you what to do. I don't know anything about your situation, so I can't give you nor my license to give financial advice. But what I'm doing is on these up days, on my bullish positions, I'm using that as an opportunity to get out. And then I'm adding to my bearish positions. So with all of that said, and by the way, I don't think, and people are asking me, well, is now a good time to buy? I don't think so. Now, if you have a different opinion and you want to buy, great. But even the most optimistic, the Jim Cramers of the world, are like, well, if you're going to buy, make sure it's large cap, well capitalized, big reserves, and that they are high yielding, meaning they pay a nice dividend. Even he's not telling people jump back in and start spending money in the market. Most of us see more downside than upside. So let's take a look at a chart, and I'll show you a couple things that you may want to think about. We'll look at the S&P 500. There shouldn't be anything on this chart that is a great surprise to you. I mean, look at the volatility. It's just insane. What if we go like to the last month? I mean, look at the way this thing just dropped, and then it goes up, and then it drops. All right? 2 green days, a red day, a green day, a red day, green, red. How do you trade that? I mean, unless you're a day trader, which I am not. Again, if we go back to, say, a 6-month view, we look at the indicators, we are well below the 30-day moving average, which is bearish. We have a MACD that is solid red, and we got a little bit of inspiration on the relative strength index, but I mean, the market is still bearish. Do you want to jump in now? I don't see a V recovery in this market. I just don't. Unless tomorrow they come out and say, we figured out what to do with the coronavirus, and we now know how to contain it. That would cause the market to go up. I just don't see that happening. Now, hell, I'm not a doctor. Maybe it could happen, but in any event. So what are some of the things that you can do to kind of protect yourself or to make money when markets go down? Well, there's the obvious one that we've talked about a lot, put options. So if you want to take a high-flying stock and buy puts, or you could buy puts on the S&P, or you could buy puts on the QQQ. So this is the NASDAQ 100 trust. So, what if you'd have bought puts when this thing crossed below the 30-day moving average? It was at, it closed at 215. Now it's at 183, right? A lot of money to be made there. So that's one way. Here's another way. I'm going to give you a leveraged inverse ETF. It's called TZA. And basically, TZA, it is called the small cap bear 3 times. Basically, this goes up when the stock market goes down. That's the way that it works. So you can see while the market has been getting crushed, TZA, on February 21st, it closed at 34.12. Now look at it. It's at 85.72 as of this recording. It has more than doubled. So a 25% decrease in the market caused a 100% return on this particular ETF. As long as the stock market continues to fall, then this ETF will go up. Now, the market's not going to fall every day. But if you think that a month from now the market's going to be lower than it is today, you may want to put some of this into your portfolio. Or if you're holding stocks and you want something as a hedge, something that will go up if the value of your other positions are going down, this is a really good way to do it. Now, I will mention that Carl Icahn, who is an activist investor, put a couple $2 billion into Occidental Petroleum. What he's going to try to do is he's going to try to dump the current CEO and the current board and replace them. He thinks this company is underperforming. Now, I went in and bought some of this because Icahn did. If you look at the fundamentals, they're abysmal. So this is purely a speculative play, right? You'll notice the company is now losing money. But if you look at what the analysts think the stock ought to trade for, on the low end, it's 15. On the mid-range, it's 43, and the stock is at 12. Now, what would it take to get the stock back on track? We have to restructure the company, Carl Icahn's job. And secondly, we need for Russia, Saudi Arabia, come to an agreement, lower production, and have oil prices go back up. One of the things that you'll notice here is the dividend yield right now, because the stock is so cheap, 25.78%. Now, that presumes that they're going to be able to continue to pay out that dividend. We don't know that that'll happen or not, but that is the current dividend yield. A few months ago, Warren Buffett pumped more money into his Bank of America position. So let me show this to you. Bank of America is now paying a dividend of 3.18%. Their PEG is less than 1. This is a very inexpensive stock. Now, that presumes that we don't go into a super big recession and, the banks have a problem with customers not paying back their loans and defaulting and so forth. But this stock has been beaten up. Let's look at a 3-year chart on Bank of America. Right, the last time it was down at these levels was December 24, 2018, and then way back over here. But do you see where we have found a 3-year support level? Look at that. Bam. So I'm also a buyer of Bank of America. Am I telling you to run out and buy Bank of America? No. I'm just showing you the kinds of things that look interesting to me right now. So TZA, it goes up when the stock market goes down. Bank of America is paying a 3% dividend, trading at a low. Buffett's a big investor in it. Again, just some things for you to think about. One last notion. I really like home builders right now, but the challenge is, let's see. I like Pulte Group in particular. But notice this thing and how it got sold off the last 3 days. It was going up, 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 up. So what happened? Here's something that'll probably surprise you. Even though the Fed reduced their discount rate, mortgage rates since the beginning of March have actually gone up. They were at 3.12, now they're at 3.65. So there's a little bit of concern here. Also, are we going to be able to sell homes if we go into a recession? My feeling is with interest rates being low and a lot of millennials that have been sitting on the sidelines, and Pulte creates a lot of entry-level products. I don't know, I like them. So Pulte I like, TZA for hedging, and Bank of America. I think there's more risk in this market. I think we're going 10 to 15% lower than we are right now. Personal opinion shared by lots of people that I've been listening to. Don't get overly excited when the market jumps up one day. There's no reason to. We'll have those days, but I think we're going to continue to see the market sort of cascade in a downward fashion until something happens with oil and the coronavirus. All right. If you are not currently a subscriber, click on the subscribe button. If you also click on the bell, the notification bell, every time I put up something new, you will see it. And I'll try to do as much communicating as possible during these volatile times. Hey, thanks for watching. Till next time, God bless. Be talking to you soon. Bye for now.